Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, Thursday, September 5th. Today is the first day of 2 days, today and tomorrow, in which we got employment data. The ADP employment change was super disappointed. 99,000 from the 111,000, and we were expecting a big increase to 145,000. So this 99,000, it's super disappointing because it still shows concerning labor market weakness. And at the same time, initial jobless claims and continuing jobless claims are still basically in equilibrium. This is not good news. This is just flat. But this ADP employment really showed something that maybe it's going to be confirmed tomorrow with the non-farm payrolls. But apart from the labor market today, it's S&P and ISM services, and this is also concerning. We got the ISM services PMI, business activity, all the ISM were above 50. That's the positive news. But from 51, we are still at 51. From 54, we go down to 53. From 51 to 50, from 52 to 53, and prices from 57 to 57.3. But despite the stronger improvements in both activity and business, there was disappointing news on the jobs front as employment decreased for the first time in 3 months during August. Employment, this part of the ISM services, shows that the reduction in staffing levels was only modest, however, but still the first time in 3 months during August. So I think the market is super sensitive to this kind of information. And on the report, on the S&P Services PMI, we see that respondents often reported that levers had not been replaced, mostly due to cost considerations. So this is putting a lot of pressure to the market due to these concerning labor issues. So this is the Nasdaq on the 15-minute chart. Yesterday, we got a little bit of a push higher. Today, it's basically flat during the overnight. We tried to go lower. We never took this liquidity, but we did it with this push again. And this push was towards yesterday's liquidity. And as you can see here, we have a daily volume imbalance. We have a bearish order block right here. And we have the last week low. So we have a lot of resistance in this zone. The daily volume imbalance is basically, let me show you, is this volume imbalance right here. And this is the second time after the big candle that we are seeing rejection. Rejection after rejection after rejection. And this 15-minute chart, it's, oh boy, it's quite bad. I tried to take along during the overnight with this move at the London Open. London was quite bullish, the same with Europe and Japan. So I tried to take a scalp in this candle with the liquidity up here to pre-market highs. But this chop and being so under trend during this weakness, I just had the stop here and I got stopped out for basically, it was just 23 points, less than 500 bucks. And today I was not expecting this so fast. My setup, I was waiting for this into this, but we never took this. And that was the concerning part. We got the reports here. We started to consolidate, and during the open, we went straight into the liquidity. We had a bull trap into this zone in which we have all the confluence that I explained you earlier, and then we dumped and dumped, and we are super weak today. Tesla is 5% today, minding its own business. Nvidia is 1.29, and actually the semiconductors are mixed, but sector is pretty decent. But I think the weakness is also coming to the Russell. The Russell is also seeing a lot of weakness. The RSP is also seeing a lot of weakness to the downside. And as you can see, I updated the trend line and I updated the indicators, and we can see strong signals of basically weakness overall, not only on the momentum pointing to the downside, but also on the trend and also on the long term. So RSP today, it's in the negative. Russell is in the negative. Banks are all deep in red. And basically that's all. A couple of Magnificent Seven are basically green, but we are struggling to really hold this daily fair value gap. The next one, this was the second one. The first one got basically destroyed in this move, but this is our last resort, because then we move into inverses like this one, and we move into imbalances like this one, or for example, this kind of bullish candles or wicks. We move into a territory in which we are right now at 10%. But if we continue today in this zone, this looks like basically an H bear flag resolution into tomorrow. Tomorrow is going to be unemployment and non-farm payrolls. Everyone will be watching that. And after that, we'll have plenty of opportunities. Don't overextend. Don't predict the market. Just wait a little bit, because the first reaction is usually to grab liquidity and to trap traders. And I think tomorrow we will need a lot of patience. Today was good until the liquidity draw, but then the order block didn't hold. We got a lot of bullish structures that we were waiting to hold, but then I mean this zone up here with all the imbalance, with the 15-minute inverse, with the bearish order block on the 30-minute. I mean, there's a lot of bearishness up here. So this was the second time that we've been rejected. So tomorrow is going to be the day. Tomorrow is going to be the day. So be disciplined, be patient, wait for the data, wait for a clear setup, then take your opportunities. Don't FOMO into the first move, because tomorrow is going to be a pretty dangerous day on a Friday. And I think that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Thank you for the views. Thank you for the subscribers. This is your channel. If you want to see a broad view of the markets, welcome. And I hope you find this approach useful for you, and it's also for me. So welcome, and hopefully you can stay with me a lot of time. So remember that discipline, patience, and risk management are key for your success. Stay safe, everyone, and see you tomorrow.